Hello, everyone. We're going to talk about expense reports today. I have a lot of material to go over. Um, this is going to be about what to do when you use your personal credit cards for some business expenses. And those credit cards are not 100% used for business. So because if they are, then they are de facto company credit cards, then these issues don't come up. But if you mix and match, listen to this presentation because it goes over the various options and which are the easiest to deal with. So this shows the various options available. The first column is just listing the features and that are available in each option. Then the first column is entering credit cards as credit cards into QuickBooks. Then you can enter it as owner's equity. You can enter a credit card as owner's equity as well. And then the other two options are using expense reports. So that's the option one, importing personal card transactions directly into QuickBooks. One method is to import your personal credit card transactions directly into QuickBooks. When you do this, every transaction on that credit card, including those that are purely personal, will become part of your company's financial records. Obviously, there are some issues there, right? With privacy. Downside, this method can cause significant issues. For instance, importing personal transactions can corrupt your business financial reports by introducing non-business related expenses. This could lead to a balance sheet that reflects amounts that are irrelevant to your business, making the financial data unreliable and unusable. So that would be the downside to option one, importing them as credit cards. There's another big downside is the privacy concern. Additionally, this method compromises personal privacy as all personal transactions become visible within the business accounting system. So in this table, if you look at column two, which is option one, so column two is option one, then option three, option uh, four, and as option one, two, three, and four. The features report QBO reportable. So if you import credit cards as credit cards, they become fully QBO reportable. You can report on the transactions on the item level, which is a good thing because the whole reason why we want to have a business accounting system is that we want to know what happened. If you do it this way, just like with bank transactions, you can report on the item level. This is a really good thing, and this is one of the reasons why it's so tempting. Personal privacy is lost. It's a big no-no, very bad. Who manages the card? The company manages the card. So company pays it, and then there's all kinds of complications deriving from that because the company pays the entire card, including for your personal transactions. Obviously, then there might be an issue there, right? So that's a negative. Full automated download and reconciliation features. So if you import a credit card as a credit card that is using the credit card function, then you get access to the full automated download and reconciliation features of QuickBooks, which is great because they work really well. You can set up rules and all of that will work for this as well, just like it works for bank transactions. Okay, so reconciliation, I'm mentioning this here mainly because of the other options. Obviously, it can be reconciled in the chart of accounts just because every account can be. So that's another place you can reconcile. You don't have to do it in bank transactions. It's just bank transactions works really much nicer. So you would never do this to something that also work in bank transactions just because you have better features available there. But I'm mentioning it here because some of the other options cannot be done in bank transactions. And this is going to be a contrast, with, especially with option two, with equity. All right, so the last two options, one of them is the personal transactions show up on your financial reports. Yes, that's a really bad thing, but they're separate. So that's not the end of the world. The problem is that this red box is the problem, that it also corrupts your critical financial numbers. So your aggregate numbers for which are critical numbers for the business will also be wrong. And that is a reason why I think, of course, you can fix it, and you can do all kinds of things with journals and so on, but with journal entries. But it is just not worth the trouble, in my opinion. It is best to stay away from this option. So let's look at option two. Option two, which is column 3 here as owner's equity. Another approach is to enter another approach is to use owner's equity account. This method allows you to record personal transactions separately from business transactions. By categorizing personal expenses under owner's equity account, you can keep them from affecting critical business numbers directly. So that's a good thing, right? The owner's equity account ensures that personal expenses are segregated from business expenses, thereby avoiding the corruption of key financial metrics on the balance sheet. However, while this method is cleaner than directly importing credit card transactions, a personal transaction will still appear in the financial records, which can make your balance sheet appear cluttered. Limitation: although this approach is better than the first, it still does not fully prevent personal transactions from appearing in your business financial records. So that would be option 2, which is column 3 here. Yeah, so this option would be column 3, which is option 2. And let's go to the features. It is just make sure that people can see this. Okay. So it's fully reportable on the item level because your transactions are imported into QBO, and so that means QBO can so one transaction on the credit card comes in as one transaction into QBO, although into an equity account, but still there's a one-to-one relationship, and QBO can report on the transaction level. And the who manages the card? In this case, the owner manages the card. And personal privacy issues, yes, because you import your entire personal credit card into QBO. Full automated download and reconciliation in bank accounts, no. So that's a big reason why this is not nice, and not as nice to use, not as convenient as entering them as credit cards, because all the nice automation features that are available in bank transactions are not available here. Okay, so reconciliation in chart of accounts. Yes, you can reconcile in chart of accounts because you can reconcile everything in chart of accounts. And well, I mean, all kinds of accounts. And in terms of personal numbers showing up with business numbers, yes, they show up. However, they are separate because these are now personal equity accounts. They will not ruin the company aggregate numbers. So it's a step up. That's why I showed it in yellow, but it is still very problematic because you're still mixing personal with business to the extent that your personal numbers will show up with business numbers, and that's really bad. Unfortunately, it's still not as bad as corrupting the key financial indicators for your business, but still it causes confusion when you see an owner's equity in the middle of business books. So that would be option 2. Let's look at the other option. Option 3 and 4 are like brothers. These are basically when you create an expense report, and let's see how they solve these problems. Option 3, using expense reimbursement reports, with item level categorization. A third method, which is commonly used by employees in large companies, is to submit the expense reimbursement reports. In this scenario, you treat personal credit card expenses as business expenses by reimbursing yourself through the business, the process. And then here's an example. For example, if you spend $1,200 on a business-related expense in August using a personal credit card, and you would submit a reimbursement request for $1,200. This amount is then recorded as a single bank transaction, single reimbursement payment to the employee in QuickBooks for a period such as a month, with each expense itemized by credit card transaction. So the benefit of this approach is that this method allows you to maintain a clear distinction between personal and business expenses. Personal transactions do not enter the company's financial records, preserving privacy and ensuring that business financial reports remain clean and accurate. Reporting, although you lose some granularity in reporting since you're summarizing the expenses into one transaction, you can you can still categorize the expenses by item. However, this method may reduce the level of detailed reporting available in QuickBooks. So let's just go through this here. Like the features are fully QBO reportable. Well, limited because when you have an expense report, you enter the entire thing as one transaction into QuickBooks, right? You get an expense report, it has $1,200 on. That's what cleared the bank. That's what you're going to enter into your QuickBooks transactions. And then you do a split, and then you can show the items there. So theoretically, the items are in QuickBooks. The problem is that split items are not as reportable as separate transactions. For example, you can put tags on it. If you have some complex job tracking that's based on tags, and you want to tag different kinds of advertisement, for instance, or different kind of spending, you can do that if it's a split item. So there's some limitations, but still the items are there, and a lot of different kinds of reporting can still be done on the item level because of that. Who manages it? The owner pays the card. Privacy, fully private, since the account is not even in QuickBooks. The automation feature is absolutely not, because the account is not even in QuickBooks, so you can't use the bank center's automation features. Reconciliation chart of accounts, no, you can't even do this because the account is not in QuickBooks. You only have the one transactions, remember? So that's why you have privacy, but that's also the reason why you can do the reconciliation inside QuickBooks. Now, the last two rows are personal transactions showing up with business and corrupting business transactions. Absolutely not. This is the best feature here. That's why I made it as green as I could possibly find colors for, to show that this is in fact a very, very good option in terms of keeping business separate from personal. Now, the last column is almost the same. It's a little bit different. The difference is that your expense report that you're submitting to the bank is done by category. So let's, I have some notes on this as well. So the final method involves entering a single transaction, just like in option 3 for all business expenses incurred on the personal credit card within a given period. But you break it down into types of expense, such as advertising and phone charges. You enter them as one aggregated bank transaction by categorized into buckets, which ideally would correspond to your expense buckets, like the categories on your tax return as much as possible, with further breakdown underneath that is defined by you for fine-grained reportability. So when you enter these things into QuickBooks, you will have to categorize. Now, the reason why I like this 4 option better, because this is where you're working with the credit card transactions. This is where you have full access to them. You might as well just do the categorization here, because if you're a solopreneur or a small company, or the owner doing the same people are doing both, you're reimbursing yourself, for example, then this is really a convenient place to do it, since the credit card is right in front of you. And then when you sit down and enter it into QuickBooks, that one transaction, you already have the categorization in place, so you just have to copy it over. So the benefit, this approach keeps personal transactions out of the business's financial records entirely and protects your privacy. Only the summarized business expenses are recorded, ensuring that your business financial reports remain uncluttered and accurate. Automation and reconciliation. Unlike the first method, where you benefit from full automation and reconciliation features in QuickBooks, the last two methods do not offer this convenience. Since personal transactions are not imported, you cannot leverage QuickBooks' automated bank transaction features. However, this trade-off is often worth it to maintain clean financial records. So, yeah, so you lose a lot of the convenience because this is a very manual thing to do. There's no question about it. You have to create an expense report. I will have a template for you guys, and I'm going to distribute that. I created a pretty good template for this, so you can do it fast. But it's still quite a bit of work, and you can't use the rules and all that nice stuff that QuickBooks offers for normal credit cards, like company credit cards. So this is what I wanted to go over. I make this presentation available as well. I break down the 3 slides here for each option. So entering as credit cards on the red, because it's the worst scenario, and then entering as owner's equity, but still entering the entire card. I have some details on this, and the last 2 columns, I also flesh it out in more detail, go into more detail, and you guys can look at this. If you're interested in any of these features, you can also DM me or ask questions. I'll be happy to answer them. Now, one more thing is I created a really nice little template to use. I don't think I published a video about it yet, but it's ready. So I'm going to publish a video, and I'm going to make the template available. So if you guys choose, and I think you should choose the last option or the third option, the third or fourth option that we discussed, then you will need an expense report template, so you can do it fast and easy. You can use my template that I make available. Thank you for listening. This is Cornel Cesar, specialized accounting advisor for small businesses. Thank you. Bye-bye.